welcome to Arf's first webinar event going online. And our topic today is how to use stablecoins in cross-border payments. So the webinar is comprised of two parts. The first part is how do we will try to get a picture of the market situation today, how stablecoins are used today, and what triggers their explosive growth over the past year. And the second part will be comprised of the future of stablecoins. So where are we going from here in terms of regulations, operations, technology, and adoption, obviously. So for that purpose, we have three very distinguished guests. We have Candace Kelly with us, the General Counsel of Stellar Development Foundation. Stellar is actually one of the oldest but most underrated blockchains that's out there that is actually being used by real unicorns for real everyday payments. So welcome, Candace, to our webinar, and thanks for being here and for accepting our invitation.
Thank you so much for having me. I'm looking forward to the conversation.
Great. And speaking of unicorns, we have head of growth of Flutterwave, the fintech of Africa, who recently hit $3 billion of valuation and had an explosive growth year, growing from about, please correct me if I'm wrong here, Jimmy, from 300,000 merchants to 900,000 merchants in a single year. That is incredible, of course. So welcome, Jimmy, to our first webinar here.
Thanks so much. Really excited to be here and excited for the conversation.
Great. Candace is actually joining us from Washington, D.C. And as you can see, Jimmy is joining us from a galaxy far, far away from here. Thank him for joining us from that galaxy. The first webinar, and I'm excited to have an intergalactic webinar, not just an online one. So,
yeah, we're talking about the future here. We're talking about all these exciting things to facilitate global money movement.
Perfect. And third, we have Kazim, co-founder of Arf, and Arf is a cross-border payments network built on top of USD Coin, USDC, with coverage of recently hit 60 countries, I think, as of yesterday. Welcome, Kazim.
Thank you for having me. Thanks a lot.
Little disclaimer, I'm also a co-founder of Arf, and this is an Arf webinar, the first webinar, like I said, and we have Kazim to, I invited Kazim to speak about the technological aspects and the operational aspects, and mostly why stablecoins are growing so explosively today and where this is all going. So let's start with the first part. So I like to start with Candace, if that's all right. And Candace is, of course, the General Counsel of SDF, and right now she's in Washington, D.C. So I want to take that opportunity to ask her about what's going on with the regulations in the United States right now, because fintech is all about the United States. We are all looking at the United States and the regulators there. And stablecoins made an explosive jump. For example, the USDC market cap jumped from $5 billion in last January to 2021 to right now $50 billion. That's a tenfold growth. What's going on here? What the regulators are saying? What's all this fuss about, Candace?
Yes. Yeah, well, thanks for that question. There's a lot going on, and it's great to have the conversations that we're having with regulators, with folks in the administration. So at a high level, in November of last year, the President's Working Group on Stablecoins issued a report and made a number of recommendations about the need to regulate stablecoins. And the recommendations essentially laid it at Congress's feet to say there need to be some more clarity in the rules of the road for folks who are engaging in the issuance and redemption of stablecoins. And Congress took that, and the House Financial Services Committee in particular has had two hearings. They just announced yesterday that they're going to have a third hearing on March 29th. I don't think they've announced the witnesses for that one yet, but they're engaging with industry, they're engaging with folks in the administration to really dig in. And, from my perspective, starting here at SDF in September of 2019, the maturity of the conversations that we're having here in DC is tremendous. And the fact that it really is a bipartisan conversation about the promise and the benefits of this great technology and how it can help with financial inclusion, how it can expand financial access and opportunities for people, and making sure that that is weighed against the need for, consumer protection, and making sure that, there are ways to root out fraud, and that law enforcement can, and learning about that and understanding that, on open blockchains, it may be actually easier for law enforcement to do just that. Having been a federal prosecutor for many years, I'm very well aware of those things. So I think that that's what's really exciting to us. There are a number of bills that are being drafted, and we're engaging with folks on those. And I think there's consensus that there should be some sort of regulation, and it's around the edges. The president's working group said that only federally insured banks should be able to issue. There's debate about whether that is the appropriate path or not, whether there's a path for, a special charter for a company like Circle that is not a bank at this point, and they may be on the path to being one. And what is the role of state regulators in that? So I think everyone is recognizing the need for consumer protection, for regulation, perhaps for insurance to make sure, and for more clarity with respect to what assets can be used to back those tokens. And so there's a little bit more stability, and fears of runs on the banks and financial stability and things like that need to be addressed. But it's I'm very optimistic that everyone is engaging, and it's across the aisle. The hearings have been really productive. And so I know I'm talking a long time, but the last piece is that it's not just House Financial Services Committee. The House, Senate Banking and Senate Agriculture both had hearings this month as well. And I would say that, everyone on the Hill, just like everyone in the world, is sort of at a different place in their learning curve with respect to understanding the technology. But the fact that they're interested and they're engaging and figuring out what is it that makes this technology really beneficial, and particularly the focus, which we care a lot about, on financial inclusion, is really encouraging to see. So I'll stop there as I've rambled on, but I'm rambling on because there's a lot going on, and it's very exciting, and we're really thrilled to be a part of that conversation.
Exactly.
Yeah.
And it's heartwarming actually to hear from you that the US regulators are in active conversations with all the participants right now on the Hill, not just about a blanket ban, not talking about blanket bans on stable coins and digital assets overall. So it's great to hear that there is an active conversation, and everybody's at its utmost awareness of the upcoming technology. So great. Of course, you talk about regulations and financial inclusions. I like to turn to Jimmy. So the Flutterwave obviously is the poster child of African fintech scenery, and especially with its recent valuation. So, and Flutterwave also is using stable coins in its everyday payments. So Jimmy, what's going on in Africa specifically? And how does Flutterwave make use of stablecoins currently?
Yeah, I appreciate that. Thank you so much. So just a little bit of context here. Obviously, we work closely with a lot of the partners that we've all been talking about. Obviously, we work closely with the Stellar Network. We work with you guys at Arf. We have also talked about Circle, and we work with them as well. So there's a lot within the ecosystem. And so just to set a little bit of context for folks who aren't aware, Flutterwave is Africa's largest payment infrastructure by reach. What we've done is we've created the connective pipes, the necessary infrastructure for business to be conducted across Africa. We're live right now in 34 countries. We really want to help with all of the needs around collections, around payouts. And so that's kind of how the company started, is trying to make it easier for businesses to conduct across borders. One of the things, of course, that it lends well to is the ability then for money to be moved. So that's powering IMTOs, money transfer organizations, powering those types of businesses and assisting with their needs for off-ramp capabilities across Africa. How do you get money into the hands of people who need it? How do you get money into local bank accounts? How do you get money into mobile wallets? How do you make that a seamless process? Now, as we've kind of moved further and further into creating more pipes around that and more functionality around that, one of the things that's come about is the obvious benefits of stablecoin and the ability for us to include that as part of our solution. So of course, working with amazing companies like Stellar and Arf and others, and leveraging some of the technology that the stable coins provide, what we're now able to do across Africa is to really address one of the core problems for Africa, which is money being transferred from across the world into Africa via remittances, money transfers, people sending money to their families, people sending money to NGOs, people send money, for other purposes, friends and family, etc. And utilizing stablecoin via the Stellar network as a method for moving money from, I'm highlighted, to move money from the people who are trying to send money, whether they're based in the US, the UK, France, wherever they're based, making that process a much more seamless, quick process, a process that has lower fees, and a process that isn't bound by the constraints of, let's say, the banks that are involved, so that it's 24/7, so that it's rapid and instantaneous. And that's really what's utilizing stablecoins and utilizing and working with the other providers in the space allows a company like Flutterwave to do. We're not a purely crypto company, right? But we found a way to leverage the technology in order to do something good, in order to really create something beneficial for what we're trying to build as a company. And that utilization of stablecoin is increasing. We're seeing that, right? So it's not just fundraising, it's the utilization has been increasing. So Circle obviously very recently had a fairly high valuation round, some very positive news as well. And one of the things that came about from that news was the fact that the USDC, and this is just USDC. I mean, we're not even talking about all the other stablecoins out there, but just the USDC in circulation has doubled in the last year, from 25 billion to now over 52 billion in circulation. So people are finding use cases, and that ability for a seamless remittance and money transfer capabilities between countries is just one of the ways that this is going to be used. There's a lot more that can be done.
Thank you for that answer. And most importantly, that you mentioned that I paid particular attention to is that you are not a crypto company, but you are making use, you are leveraging a technology to make payments across Africa faster, cheaper, and more convenient and more inclusive for everybody. And that's what I've been trying to explain to people. You don't have to be a crypto company to use a crypto, or you can't be named a crypto company just because you are making use of stablecoins. And that's important to hear from you, because that's going to be, I think, the norm in the coming years, leveraging that technology, but not become a crypto company at all.
That's exactly right. It's funny, it's the early days of crypto. You get people just tacking on crypto. It's like .com. If you just put .com, your valuation goes up, right? Early days of crypto, when people don't understand it, it's like, what is that? Long Island iced tea blockchain? It's like stuff like that, where it's not crypto. The idea is not just to put the words crypto into anything and then have the valuation soar and raise a big round. That's not the idea. The idea is that this technology has real world use cases. It has real benefits. And I think we're just now starting to see how those real world use cases can come about with companies really trying to solve core needs.
Great. My team is warning me that I should remind all the people that are listening to us that they can ask questions. I'm going to review the questions and ask panelists the ones that I select or my team selects. I don't know at this point. We'll see. So Kazim, well, part of the question that I was going to ask you was answered by Jimmy actually, but I'm still
no. It's
okay.
great.
Okay.
Jimmy,
what the question is, what makes stablecoins so different from the other technology that we had, like e-money and stuff like that, and virtual IBANs and all that stuff, so different that it's exploding in demand, it's exploding in use cases, it's exploding in growth. What's all this fuss about stablecoins?
Well, obviously, decentralized finance helped a lot. And USDC, I believe, became the norm for fiat USD ramp on, ramp off, basically. So almost all the trade is converted to back and forth to USDC. And I believe this is one of the reasons of the explosive growth. Picking up from Jimmy's words, Jimmy really explained greatly what the benefits to the end user, how they are building the pipeline and how they are connecting the last mile, etc. So we at Arf, I believe we are trying to do the same, but with the financial institution. So Flutterwave has the capability, has the vision, has the manpower, and the technical ability to pull that off, to adopt USDC, to build the infrastructure with all these blockchain parts and integrate it with the payment channels, etc. So at Arf, what we are trying to do is helping MSPs, licensed money service businesses, to adopt this technology in a compliant manner and able to connect Flutterwave. We are working with Flutterwave, and as Arf network grows, we are integrating all the MSPs even coming from traditional world and helping them to adopt this new, both the infrastructure and the new settlement asset, and hopefully able to connect all these traditional actors, which doesn't have that much technical power, to the new rails, and embrace a big network that uses stablecoins in an efficient manner, in a cheaper way, and in a compliant, obviously compliant manner. So Arf's goal is helping every MSP, well, it's not going to happen, but become Flutterwave, but at least helping them up to speed and move them to a level, at least they are able to talk, interact with technology strong startups like Flutterwave. Basically, democratization. So MSPs are the least served actors from the banking industry, and at Arf we are trying to help them at least have better rails and better infrastructure to interact with each other.
Great. So from what I understand is so what stablecoins actually bring on the table together with the blockchain technology is, instead of two MSPs, for example, trying to connect to each other, they instead connect to a single blockchain that runs USDC. So it's much easier to connect all these financial players, MSPs, banks, and other players to each other on a single backbone of financial infrastructure. That's what Arf been trying to do.
Yes, and while doing that, we are using, for example, Stutter's cross-border protocols and utilizing USDC on Stutter, and this is the way we connect to Flutterwave actually. So there are multiple parties that paid a lot of attention and did a lot of things all over the years. And at Arf, we are trying to connect and use all these parts and bring them all together in a compliant manner, basically.
Great, and that concludes the first part of this webinar. Thank you for all your answers, and I'm immediately moving on. We are on time, by the way. I'm immediately moving on to the second part of this conversation. So where are we going? And I would like to start with Jimmy. Jimmy, you are growing explosively, like I mentioned several times. I'm a big fan of Flutterwave. Sorry, I'm mentioning it all the time. So is your growth continuing towards the end of 2022? And what kind of investments are you planning on more usage of stablecoins in your everyday transactions and offering more products, more diverse products maybe to your businesses that are using you?
Yeah, I certainly hope that as the person who is somewhat in charge of at least a portion of the growth for the company, that we continue to keep growing. That's definitely something that we're all striving to do as part of our commercial and growth organization. And I'll answer the first piece of it is more around the stablecoin. Then I'll answer the second piece of it, which is more around kind of Flutterwave's goals and how we'll kind of play into that. And I would say that overall, when you're talking about stablecoins, the thing that we say, our mission statement, is that we're simplifying payments for endless possibilities. It's a core tenet of the business. It's a core mantra of our company and what we say many times. And I think it's similar with stablecoins. It really relates to the stablecoin industry as well. The movement of money for money transfers for remittances, I think it's just the starting point. Stable coins are going to allow for many more things to be done. And I'm talking more around commerce. How can the utilization of stable coins allow for more people to get access to different products and services in a timely fashion? How can money movement be facilitated seamlessly when you no longer have to physically move that dollar between vaults, right? And removing a lot of the players involved, but while keeping that all transparent, open, and trusted, right? That's where Stellar comes in and kind of facilitates really the transactions. So in terms of the stablecoin usage and kind of overall, I'd love to see that end-to-end capability where I, as someone sitting in the US, can send some money to my friend in Nigeria. They can take that money instantaneously, purchase their phone, pay off their phone bill, be able to do certain things. And that end-to-end transaction all be done seamlessly, efficiently, quickly with low fees. That ability to then push it through to the end, to the commerce piece, would be great. Like that's, I think, where we're moving towards, is increasing the number of use cases for stablecoins and opening up what that allows for. Now, at Flutterwave, obviously, because our goal is to simplify payments and for those endless possibilities you talk about, we're absolutely looking at how we can leverage existing technologies. And it's not just stablecoins, it's a lot of different technologies, it's a lot of different partners. It's working with innovative partners like Arf and Stellar and finding more ways that we can all build on what, the capabilities that we're really building on, and to, again, facilitate that transfer and movement of money for the purposes of making purchases and commerce. So that's, it's absolutely something that we're looking forward to doing as well, as we increase the capabilities we have and integrate with Circle or integrate with Arf and integrate further with Stellar. We want to open up more capabilities to the companies that we work with, the merchants that we work with. Right now we work with companies like Uber and Netflix and others, and we want to help facilitate their capabilities across Africa and use the technology that's out there to help facilitate transactions and commerce. So yes, absolutely. Hope to continue to grow. Last year when I joined on board, it was about 290,000 merchants, over 900,000 merchants now, processed over 200 million transactions. And, we want to continue to grow. We want to continue to provide these services for the merchants we work with.
So what you're saying is that the more easier we make money to move around the world, the more explosive the e-commerce will become. The actual commerce will become, not just e-commerce, of course.
Yeah.
But the commerce will become, and this will open the floodgates maybe of the world's GDP, increase of GDP, and all sorts of different.
Absolutely. In fact, the remittances into sub-Saharan Africa is the most expensive in the world. Also, in many cases, it's the most important because it's a big part of the GDP. I think in Senegal, it's 20% of GDP. So, the importance of something and the high cost of something make it a big problem to solve. And if we're able to find ways to remove some of those barriers, reduce the fees involved, and increase the abilities for people to be able to do that, we're doing something that will really change lives and really facilitate business and the growth of businesses across Africa. I'm really excited to be a part of that.
Great. Great. And now I want to turn to Kazim as a continuation of what Jimmy just said. Jimmy was talking about unleashing a whole new level of commerce and speed of commerce in the world. So what's Arf doing right now in terms of new products what will that unleash, so to speak, Kazim?
Perfect. Arf is really focusing on solving the cross-border transfers and remittances similarly, and our perspective is actually a money service businesses perspective. So we are trying to remove all the friction on adopting stablecoins. So what are the current problems? If a financial institution, if a money service businesses wants to utilize stablecoins, they have to deal with ramp on, ramp off. So if they should convert their USD to USDC. So there's a time delay. There's always SWIFT at one point if you are trying to convert. So in the end, these institutions are bound by regulation. So their treasury should contain USD, for example. Maybe in their jurisdiction they are unable to operate USDC. So Arf's goal for future products are removing all the friction and removing all the obstacles against adopting stablecoin, which means basically Arf is introducing sending side credit, for example. So giving credit to MSPs so they are able to interact when they are converting their USD to USDC, basically. And on the receiving side, for example, Arf is aiming to provide credit services in jurisdictions where they are unable to touch USDC directly. So while incorporating all these little pieces and providing the compliant infrastructure for transfers and building this network of financial institutions, basically, if we put all these things together, we are seeing a picture where adopting stablecoins are just a given thing for any money service businesses. And Arf is making this process very easy, and there is no reason to try it. So once you try it, and once you see the benefits, the speed, the reducing of costs, and having this strong infrastructure, I believe the whole world will realize that this is the way to go.
Great. So what you're saying is stablecoins just open up a lot of opportunities right now to make the old school, or not old school, but traditional financial products like credit, for example, to operate at a much efficient, more efficient and faster and cheaper way.
Yes. So let's pick an example, right? So if we look at DeFi, and if you look at high yield, for example, we are seeing big interest. Right. So if an MSP, a financial institution, manages their treasury, why not providing the service? If they are already using USDC, why not getting the benefit of high yield accounts, for example? And once you have it, for example, combined with the credit services that are provided by traditional financial actors, you are going to get benefit for sure, because you have the spread. So basically, adopting this new assets and adopting these new methods of interacting actually provides a lot of opportunity for MSPs too. So, for example, in Arf's place, Arf is an additional actor that forms the network, right? But we are not increasing costs. We are not increasing, we are not adding latencies. We are reducing, because we are just bringing these opportunities and the spread to the benefit of the MSPs, basically.
Great. Now, with that note, I would like to turn to Candace, of course. Who is I intentionally did that, switched Kazim's and Candace's place, because Candace mentioned that she was a former federal prosecutor. So Candace, these guys are talking about all sorts of different things that many people, regulators, might not quite understand in the first minute or so. So what do you think? Is all these things manageable, or are we all going to jail? Because if it's the latter, please be candid, so I can spend more time with my daughter and stuff like that, you know? So Candace,
absolutely. No, I think that as I said in the beginning, you know, the folks on the Hill here in the U.S. Obviously, I've spent more time here in the United States, and I'm more familiar being a federal prosecutor here. That, you know, I always like to talk about it in terms of use cases. We've talked a lot about use cases. You know, fraud and ransomware and illicit finance and money laundering, those are all use cases as well. And the important thing is to recognize that those things happen in the cash economy, and there are tools and there are ways to make sure that there are regulations and that the consumers are protected, that the stability of the monetary system is protected. And that I think that remains true, and even more true with blockchain technology, certainly with open permissionless public blockchains like the Stellar network. There may be some other exceptions that make it a little bit more challenging, but you know, from a prosecutor's point of view, if you can actually see the blockchain and you can analyze transactions, you don't need to know who's transacting to be able to see patterns and to zero in on suspicious activity. And then there is always, as we've also mentioned in this, there's always an on and off ramp, right? Like there's always this interoperability with the traditional financial system. And so there's compliance at those on and off ramps. And that's what right now where we are focused a lot on those on and off ramps. And so I think that there is absolutely a path. And I think that a lot of it is making sure that the industry is using their voice and engaging with regulators, with the policymakers to explain that maybe the first use case that they ever heard about was ransomware, something that catches a lot of headlines. Maybe people are focused on trading and speculation. That's a use case as well. But this conversation is so encouraging because there are so many companies beyond the ones here, beyond Arf, beyond Flutterwave, in the Stellar ecosystem. Folks are using the network to solve real world problems and real use cases. And those are problems and use cases that policymakers care a lot about. And so the fact that they're listening and the fact that we can engage with them, we may not end up 100% happy with how they decide to regulate, but there's absolutely a path, and it's a reliant, you know, we have to make sure that we're paying attention and not thinking that they're going to figure it out. The technology is intimidating to some people, and but I think talking about these types of use cases and real world problems, as opposed to falling in love with the technology, saying, let me explain the technology to you. It's let's explain how the technology is solving problems, and not the promise of it solving problems in the future, how it's solving problems right now, today. And that is happening, certainly from my perspective in the Stellar ecosystem, it's happening every day. And when we're able to tell those stories, it really resonates. And I think that's why the conversation is maturing in the way that it is, as opposed to people saying, stablecoins are bad and we need to ban them. That is not the conversation. So it's really encouraging to hear. And the other piece, just, you know, to tack on to what Kazim and Jimmy have been talking about, I mean, to me, the themes of competition, innovation, interoperability, those are also, that's kind of the next layer. You have the use case, and then making sure to highlight those aspects of building on blockchain technology, allowing MSBs to be in the game, and not saying, oh, let's only have banks be able to do this, right? That's recreating the silos and the friction that we're trying to solve for. And so that's another layer of the conversation that we need to make sure that those aspects of this ecosystem are also being considered as regulations are being crafted.
Great. And I would like to emphasize one of the things that you have said, that it's really, really important to get the right stories out there and shape the information flow and shape the perceptions of people who are not familiar with the technology, which is complex, to be honest, but trying to learn about it and to make sure that they learn the right way. Not just about the speculative waves that make the headlines, like you just said. So with that respect, I would like to move on to the to the questions that are being asked right now by our audience. And one of the questions, actually, I'm going to combine it with one of my own questions, and that came from Pira. She has a little bit of a hard to pronounce last name, so I'm going to call Pira. So she asked, wouldn't the adoption of popular stablecoins like USDT, USDC, which are USD pegged, increase the world's reliance on USD? So will this be a risk? That is the question. Actually, we thought about it a lot at Arf, and we have written an article about it, the hyper-dollarization of the world through stablecoins, and will that hyper-dollarization solve the hyperinflation in some of the emerging economies? So we thought about it. That's why I wanted to ask this. Let's start with you, Candace. What do you think about this? And please think of that question in combination of financial inclusion. So on the one hand, you have financial inclusion, you have USDC, $50 billion market circulation in the market, in Africa, in Latin America, in Southeast Asia. But all these countries have their own currencies, but all of a sudden, people have their own unhosted wallets having USDC in it. And there is a potential of hyper-dollarization there besides the financial inclusion. Is there a threat there? Is there a risk there?
Yeah, so I think USDC may be the only stablecoin that we've mentioned so far today. The Stellar network was actually built for its asset issuance, and that happened, I believe, before stablecoin was a word that was commonly used, right? So unlike some other blockchain networks, in order to issue an asset, it just takes a couple of lines of code. It doesn't take smart contracts. It's a very simple process. And so while USDC is one that we've talked about and certainly there's a lot in circulation, there are plenty of other countries and fintechs and banks that have issued fiat-backed stablecoins of their own currency in their own local markets. And so while there is certainly, there are some use cases where USDC may be helpful in terms of guarding against a more volatile fiat currency or hyperinflation or something of that nature, it doesn't have to be. And I think that goes back to this question of interoperability and innovation and competition. So I think as there's more and more clarity with respect to the obligations of issuers of stablecoins in the US, in other countries, there will be more and more countries and more players at all levels of the financial system, hopefully, assuming that, depending on how the regulations come out, that are able to issue fiat-backed stablecoins. And then I think the other piece that we haven't talked about is that there's a certain class of stablecoin called a central bank digital currency. And there are, I think 90 different countries that have either issued or experimenting or researching. And so again, that to me is another area of competition with each other, other countries with stablecoins. But to me, all of it, to the extent that there's an ability to access these digital assets, whether it's a US dollar, whether it's another fiat-backed token, whether it's a stablecoin or a CBDC, all of it, the expanded reach of the internet and being able to access these products without having to have a bank account necessarily. We have a pilot going on with MoneyGram right now where you can walk in with cash and get, right now it's USDC, and you can take that USDC in your self-hosted wallet, and eventually, as it expands globally, you'd be able to walk into any MoneyGram agent, go through the KYC checks and compliance checks, and be able to get local currency in that market. So they're just, it really just, regardless of what fiat is backing the token, I think that there is a great opportunity for financial inclusion and to move away from the friction that the traditional banking system has introduced into remittances and payments.
Yeah, I'd love to add on to that a little bit because I love what Candace has just said here, because what the Stellar network provides, and what Candace was saying about being able to tokenize and create stable coins goes beyond just USDC. We've talked a lot about USDC, and I'll answer the question that's being posed, but there's actually several questions here, and it lends well to what Candace was saying, because that's how we leverage the Stellar network as an anchor, that we're able to utilize the technology there in order to tokenize the fiat currency we have to facilitate the full end-to-end money transfer that's happening. I'll explain what I mean there for those not quite as familiar, and I'll explain that a little bit further. But just to kind of tag on to the first question is, would the adoption of popular stablecoins like USDT and USDC increase the world's reliance on USD? The reason USDC and USDT are tied to USD is because the world is already reliant on USD. That's how it's kind of a central currency already for facilitating cross-border transactions, commerce, etc. That's the reason why stablecoins started with USD. I don't think that it's increasing the adoption. It's actually just allowing for the fact that so much is already reliant on the USD to now be done in a faster manner. And it's just so early. We're talking about 50 billion, we're talking about trillions of USD, right? We're not talking about the fact that this is now increasing use cases. We're actually just kind of switching over some of the existing USD use cases to a frictionless environment where commerce can happen much more rapidly. And that's really what's happening, is that because there's such a major use case already and such a high reliance on USD, USDC, USDT, USDP, etc., are just allowing for those transactions to happen using a digital token. Right, that's really what's happening. So, and kind of to expand upon that, I had a conversation, I think it was yesterday, about stable coins, about whether or not there would be other stable coins and other currencies that would become like the USDCs of the world, where it becomes, kind of a method that people utilize for a lot of other things. And the difficulty of that is, whether it's British pounds or euro or anything else, there are use cases, but there needs to be companies like ours building on it and use cases building on it. And there's not as many as the USD environment ecosystem at the moment. But one of the things that we do and how we leverage the Stellar ecosystem, for example, is that when we are talking about moving money from USD into USDC, into then a local currency in Africa, we have to still transfer that somehow digitally. And that's what we use the Stellar network for. We use that to tokenize. So I'll give you an example. Let's say I'm sending money from France in euro to Senegal and get it into a local bank account in Senegal in ZOF. Well, there's a lot of movement there. So that first thing of euro needs to be then transferred into essentially USD, then USDC. And then that USDC then has to come to our accounts. And then what we're doing on Stellar is we're saying, okay, here's the exchange rate of USD and ZOF. And so what we're going to do is then say, we're going to create some tokenized stablecoin for ZOF, our ZOF token. And based on the exchange rates right now, we can then digitally say, here's the ZOF token to USDC exchange and make that exchange. Once we make that exchange, we now have these ZOF tokens that we can then say, okay, this, 100 ZOF tokens we're talking about, we have 100 ZOF, and we're going to send that ZOF into the bank account of the user. Right. The on-chain, what's happening on-chain with Stellar is only possible because of the technology that's been built. It's possible because we as an anchor have shown that we have the fiat currency to back it up, but the stable coins are facilitating that to happen digitally. Right. And then, of course, the fiat off-ramp capabilities that we've built over the years is to get the actual money into that bank account. Right. It's not a ZOF token that nobody actually uses anywhere. It's the ZOF it's the ZOF currency, hard cash going into a bank account where someone can take it out in cash and use it, or send it over to their mobile wallet, or whatever they need. So it's a lot of that. And I think there's actually several questions that I've seen kind of popping up where it shows kind of the confusion of what stable coins are and what they aren't. right? So I think there's probably a much longer conversation there, but I've probably taken up too much of it already.
Questions myself, trying to pick from them. It was in unison with mine to you about the financial inclusion part of the world, but we have to have another webinar to answer questions, and explain some basic concepts. But what you have just explained, the stablecoin exchange and what's going on digitally, as I'm going to ask now Kazim that Arf is using the exact same technology as a Meta Anchor in Stellar. So Kazim, you heard Jimmy, how things are going there, and what do you think about explosive growth of stablecoins, USD-backed stablecoins, disrupting, so to speak, the world's order, as Pira's shouldn't ask the way it is, but it sounds like it in my head. So what do you think about that?
So there's a certain reality that economy, cross-border transfers and commerce is run with USD, basically. So as Jimmy said, this is the reason why we have USDC, why we have digitized dollar. But the world is changing. So international trade is changing. And I believe we are going to see a lot of CBDCs or local stablecoins popping up. So the reason we do not have any big competition from other countries' currencies is adoption. And as adoption grows, as trade moves to the digital fiat, like in Jimmy's example, like ZAR, digital ZAR, we are going to see that there's a growing amount of liquidity between foreign exchange pairs, basically. If we see certain exchange rates as getting stabilized in digitized version of the fiat currencies, then we are going to see direct international trades, for example, without relying on traditional banking or SWIFT system. And the world's geopolitics is changing. So there are a lot of developments going on, and probably we are going to see the reflections of all these in stablecoin environment too. And right now, we are going to see the liquidity is growing because adoption is growing. So in the end, it is very interesting. It is very interesting to see all these developments. And there is a fact that USD and digitized version of USD-backed stablecoins will always be there because, for example, countries with high inflation and the citizens will prefer, obviously, holding USD or any USD-backed stablecoin. So in the end, these use cases will always stay, and USDC will always go. As you said again, it's a trillions market. So billions are nothing. We are just seeing the beginning. But in the end, geopolitics and all these other developments in the world, I believe that we are going to see a lot of local stablecoins, and the liquidity will be there, and we are going to see real exchange rates in digitized versions of them.
Great, and you mentioned about countries, citizens of countries with hyperinflation or high inflation getting their hands on USD-backed stablecoin. The reason, of course, this is one of the reasons why the usage of stablecoins exploded over the past 1 or 2 years, because it's incredibly hard to get a hold of actual USD and open a USD bank account and get USD into that bank account in anywhere in the world besides the US. But it's incredibly easy and convenient to just open an unhosted, a non-custodial, decentralized wallet and get USDC into that wallet through Ethereum.
And you can get loans at 3 a.m., right? You can get loans from DeFi at 3 a.m.
Exactly. Yeah, you can get loans at very favorable rates at 3 a.m. and you can just give them back and pay them back at 4 a.m. for example. Creditors all around the world, credit markets working 24/7, banking is working 24/7. We are going into an exciting future due to this technology. I think combining, I'm talking about not just stablecoins, also CBDCs and other cryptocurrencies and all these use cases that you mentioned. Jimmy has mentioned about merchants and about the commerce being cross-border commerce being exacerbated by the usage of stablecoins, by the fast-moving money. And you mentioned credit, people are mentioning yield, like you mentioned loans, getting 3 a.m. loans. And there's a whole bunch of NFT world right now. We are digitizing all the assets that I don't quite understand yet, but it's there, it's coming, it's growing. This is going to be a very exciting journey, I think, for all our companies and all the other companies that are working in Web3 metaverse, so to speak, right now. So this, I think, concludes our webinar for today. I think I cannot ask one more question because the answer will be about 15 minutes from all the and I'm apologizing to Faisal. Faisal can't ask a question, but I can't just ask it right now because it has a long answer. I think Faisal is in our advisory board. Sorry, Faisal, I will answer the question over WhatsApp in a few minutes. I thank you once again for joining our first webinar. I hope I managed to moderate it in a way that you liked and our audience liked. I'm open to feedback, obviously, for that. And sorry for all the people that asked the questions, but I couldn't ask to our panelists due to the time constraints. And thank you, Candace, for joining us from Washington. Thank you, Jimmy, for joining us from another galaxy. And thank you, Kazim, joining us from Istanbul. And this concludes our webinar. So any final words I can take other than that?
Just real quick, it's so global, the panel, and that's just exactly the same as what a lot of this technology is going to allow us all to do. Like you said, 3 a.m. loans, inclusion across Africa, the ability to tokenize physical assets. There's just so much that this is going to allow. It's amazing.
Great to have you guys, and thank you again for your time and for your great ideas that you brought to this webinar. So we will say good night from Istanbul, where I am right now. It's morning in the United States, and wherever you live, you are living right now, and you are joining this webinar, this global webinar, so to speak, from hosted by global companies. Thank you all, and goodbye.
Always a pleasure.
Thank you.
Thank you.